Hello, everyone, and welcome back to another episode of the Mills Knows Bills podcast. I'm your host, as well as current CEO of MKB, Mills Bender. And with me today, I have a wonderful friend of mine who I think I've known you for 3 years now, Paul?
Yeah.
It's been quite a while, so it's way overdue that we have Paul on the podcast. But Paul Childers is in the business credit repair and building space. And if you are unfamiliar with what that is, or the fact that there's even business credit versus personal credit, you're in for a good one today. So without further ado, Paul, please take a moment, introduce yourself, and then we'll get started on chatting.
Yeah. Well, thanks for having me on. It's actually crazy that you say that, because it has been pretty much 3 years now, and that just is a reminder that time flies.
Yeah.
When you're pursuing stuff and doing things, and it's just a good reminder of how far I've come and how far I'm sure you feel like you've come and now where you're going. But I'm Paul. I own BlueSky Business Solutions. I live in a small town in Minnesota. My wife and I have been married. We'll be going on 16 years. I had to make sure I was right on that date. We got 2 kids, a 12-year-old and a 7-year-old. And my background's from automotive, which is where I started to learn a little bit about the commercial lending and business financing and all the differences that existed there. And jumped into this business, literally 3 years ago in March 23rd was my official launch date of 2023. So 2 years ago, going on the 3rd year now. So that's a little bit of background on me. I work with a lot of home service businesses. We do the business credit side of things. Mm-hmm. And we just help business owners manage overall their credit and money a little bit better, and hopefully give them a little bit more guidance and assurance on what they're doing versus just giving them money all the time.
Yeah. We're in a very interesting time in the economy right now where things are at a standstill for a lot of businesses. And so with that said, why is there an extra importance on having your business credit built up in addition to your personal credit built up?
Yeah. One of my favorite analogies, I was just speaking at a HVAC owner business event down in California last week. And, one of my favorite analogies is if you're a bodybuilder, you don't just go to the gym and work out your right side of your body, right? Like, our right side of our business is our personal credit. So you would be pretty goofy getting up on stage and all you ever did was focus on the right side of your body, and you're a bodybuilder and you go and compete because you just look ridiculous. In semblance, that's almost identical to our businesses, right? Like, when we're using everything on our personal credit or just doing cash only, we're really just using one side of our business. We're not leveraging it to the full capabilities. So why is that business credit piece so important? Well, you can move 30% to 40% of all the items that are affecting your personal credit score off of your personal over onto your business, which means utilization, debt to income, all that stuff comes down and allows flexibility, and it allows a little bit more powder in the keg, if you will, for when you really need it for bigger purchases, or definitely for when using the SBA, because not everything's going to be tied up with that. So, that business credit piece is really, it's just, it's a great wedge to drive between your personal and your business that much further, and just create that natural utilization and efficiency that needs to exist there. And it's better if you want to ever sell your business too, right? Because now all of your personal stuff and your personal credit, your finances are completely separated out. You've got things structured properly. It's just the smart play to do, and it's unfortunate that more places don't educate and inform on this stuff.
Well, why do you feel like a lot of places don't educate on it?
A lot of it, I think, especially with banks, right? Because I just had a client that came to me and he went and I was like, here, go to TD Bank. They do commercial loans. I think you can check Bell Bank out. They advertise as commercial too. And he came back to me a couple days later because he was going to refinance a truck. And he goes, the lender at Bell Bank was like, I didn't even know that credit existed under a business. So some of it is just banking policies, right? When you look at an actual bank and you look at their risk portfolio and you look at how they're set up, they want to have control of just about as much of your personal assets or collateral. I shouldn't say collateral because it's not always personal assets, but as much as collateral as possible. So when they do that, they're going to really just look at your personal credit because in their terms, the personal credit side of things puts teeth into it further, and it lowers their risk a little bit more by having that personal guarantee. And it also has more of an effect on you on a personal level as well if you're delinquent or missed payments or all that kind of stuff. So you're less likely to overutilize the system and then put them into a spot where they don't have the liquidity to help you, right? So that has a lot of play with it, just like they have a lot of different industries that they like to specify or play with too, right? Like they have different risk tolerances, all that kind of stuff plays into how they set their structure up. But for most smaller banks, it's just a board of directors that set it up, and there's a lot of benefits for them to tie everything to you personally versus allowing it to just go on your business.
As a business owner, if you are trying to get financing through that community bank, how do you push back on that then?
Ask questions, right? I think the one of the biggest problems we have just as a society as a whole is when we get referred to somebody or when we get in front of somebody that's got a title or a name or they're, whatever, right? We just tend to trust without verifying stuff. And so what I tell owners a lot is just ask questions until you truly understand what it is that they're doing and how they're doing it, right? So your pushback can be as simple as, hey, if I sign up with this loan for you and it goes on, you're going to have me personally guarantee it, where is this showing up at? So when I come back in 6 months and I want to go buy a house, when you guys pull my stuff, is this going to affect me from being able to buy a house through you guys as well? Or is this going to show up over on my business where it won't affect my debt to income and my utilization? Right? Because some banks don't even report to the personal credit bureaus, so then they definitely don't report to the business bureaus, but they report to the universal bureaus like LexisNexis. So, sometimes there's a benefit to that, but a lot of times there's negatives to that. So you just ask, how is this going to show up? Hey, at any point in time that I'm a customer with you guys, are you ever going to get to a point where I can do this stuff just collateralizing business assets and not have to collateralize personal assets? What does that look like? Right? When I sign this contract with you guys and you put a UCC filing against me, what are you guys actually covering on that UCC filing? Are you doing a blanket lien where it's covering everything, or is it just covering the assets that I'm taking a loan out for?
I mean, where does somebody, you and I are familiar with these types of things because we've been in the industry for a while, but somebody who's not, they're great at their trade or their craft and they happened to start a business and now the business is making more than they ever expected. How do they even know where to start to ask some of these questions? Because you don't know to ask a question if you don't know it exists,
Yep. Well, that's great, right? Like there really isn't a lot of good resources out there for startup businesses like that in that space, right? Like as you go and look, like score.org, they have a lot of good resources that a new business owner can go through. They even have some of them like in specifics to this category to a point, right? But some of it is just almost dumb luck in some cases where you just come across somebody that can help you answer some questions for you. I'm definitely working on getting more content and material out there that's just going to be more available for people to just access, because there's a huge gap and there's a huge lack of education because the banks aren't going to do it because they want you to do the loans through them because they want your money, they want that inflow. Most brokers aren't going to do that because they want you to be a client, they want you to stay in. They might educate you a little and say the right things and do the right things, but at the end of the day, we got to remember, like, your money makes them money. So they want more of your money to come in because banks make money off of your money creating interest for them, right? So there's a reason why they hold it and they don't, like everybody thinks their money just goes into this like cool vault. No, that money's gone. It's into a stock market, it's into the investment markets. Like it's making interest as soon as you put it in. So they want it, right? Brokers want it because it's a direct payout right to them. So sometimes it's just by luck. Sometimes it's just utilizing resources like that. CDFIs are really good resources. Community development financial institutes are great because they have a lot of startup resources.
Okay.
Score.org is a good one. But again, it's really just ends up at the end of the day being who you know in a lot of cases and coming across the right person.
So let's rewind a little bit because you started off in the automotive industry. and then you found your way into business credit. I know a little bit about your story, and so I know that that wasn't a huge jump for you, but I'm curious, what was that transition like, and why did you want to get into it?
Yeah. So, funny part about, I think, any kind of business is I don't know that I necessarily wanted to get into really anything. I didn't really know what I wanted to get into when I left automotive. When I left automotive, I left because I wanted to get my time back. I wanted to get my weekends back. My kids were getting older. I was losing time with them. And so I went and was a sales director for an ag tire and construction company for about a year and 11 months or so before we mutually parted ways. And then it was at that point in time where I was like, okay, I'm going to start a business. I don't really know what it was. So the funny part was, this company is now defunct and they're terrible, but I started out with a company called J Galt. I was with them for about 4 months, and they were, as I got in and was listening to some of the stuff, I was like, this doesn't jive at all with what I learned in commercial automotive, right? And so I left them, but I don't think I would have gotten into this space the way I did without having that interaction, but also that bad interaction with some people that I felt were like, no, you guys are doing this for the wrong purpose, the wrong intents. And it just turned me on immediately, like, hey, there's a problem that exists here. So, like, it definitely had a lot to do with my background in business in the commercial world of automotive, because I'm just curious. So when you get two businesses that come in within a week of each other, and one qualifies for a certain type of loan and the other one qualifies for a different type of loan, and everything else in between seems to be pretty much identical, like, it just started opening up questions for me. And so that's where I knew a little bit about business credit. So then when I left W2 World, saw J Galt had this business credit stuff going, I was like, oh, that's interesting. I know about this. I can jump in and do this. Found out, oh my gosh, you guys are doing this absolutely the wrong way for the wrong intentions. Like, I've got to get out. Well, now they're completely out of business, which is the irony of life, I think. Also, why it's okay for people, I think, to jump into something, and then if they don't feel good about it, trust your gut.
Yeah.
Right? So that falls back on a lot of it. Like, so that's what got me into it. What got me into this was the experience with J Galt, and then also my experience with, like, some of the direct lending partners that I had too, where now I'm completely for the most part, out of the direct lending space. Because again, I think you can't really do things for the benefit of a client when you have chains wrapped around you, because that's how your life is paid for. And there's nothing wrong with that. But you can't change or correct an industry when you're chained to it. So there's a lot of those pieces, right? I like to be a disruptor. That's also why I liked automotive. I like to disrupt and change people's opinions about buying a car, right?
Yeah.
I like to change people's opinions about business funding and business lending and all these things that kind of have negative connotations to it. And so I think it just kind of naturally was a good fit, I guess, in kind of a weird roundabout way.
And I know that through our conversations, you work with a very similar demographic that MKB works with. A lot of blue collar folks, whether it's construction, trades, or home services, whatever it may be. Why do you enjoy working with that demographic?
Yeah, they're my people. I live in a town of 1,400 people. It's a large farming community. I'm married into a farm family. I've worked in blue collar industries myself. I've worked in a factory. I've worked in landscaping. I've worked in, just hard manual labor jobs. And so, like, that blue collar, just go and get stuff done. Like, that's my comfort level. And I also don't like dressing up. So blue collar space is great. I can just wear a polo. I can wear, quarter zip and jeans, whatever, and I blend right in. So it's just definitely, like, that's who I am familiar with, and that's who I serviced a lot in automotive as well. And when I was in the ag tire and construction tire world, like, that's who I was working with. So I just know those spaces and I know those people.
I also find, at least personally, these are the types of business owners that happened upon owning a business most of the time. They wanted to buy back their time a little bit, so rather than working for somebody else, they decided to go out, do it on their own. they happened to bring in more business than they could handle, so then they hired somebody else, and it just naturally grew.
Yep.
And so, personally, we love those conversations because a lot of times they have that true curiosity around their finances too. They have no shame asking us questions, and like you said, they're gonna go out and do it.
Yep.
It doesn't matter what the answer is, they're gonna go out and just get it done. And so I feel personally there's a lot of joy in helping those individuals because you get to see the fruit of the labor more often too. And so with that, if they're willing to go out and do it, do you find that working with blue collar industries, they tend to get better results working with you too because they're willing to put in the effort?
Sometimes yes, sometimes no. One of the things I've identified as I work with this, especially in this industry, is that there's definitely seasons for them,
Yes.
right? Like there's
Absolutely.
seasons where even with the best intentions, they want to start and do something, and then life gets busy, and they just have to go respond and do it, and you kind of lose them for a little bit, right?
Yeah.
But I think to your point though is yes, you definitely I think see more results with them than maybe some other industries, just specifically from how quickly you can affect their situation. When somebody comes to me and they're in a lot of debt, or when somebody comes to me and they've got a lot of vehicles that they financed improperly due to a bank not having it done right, or due to getting bad advice from a business coach or a lender or whatever, right? Simply by just moving somebody over to the right resource and giving them the right information and education, I get a lot of mortgage lenders and originators that send me clients, and they're not getting approved for HELOCs, they're not getting approved for home loans, and sometimes we can affect that in under 45 days where we just move that stuff off, and then all of a sudden, boom, they get that approval for that HELOC or that home loan, right? So in a lot of cases, you can see a pretty quick turnaround for some of this stuff. But I think the other part is most of the time they just truly appreciate the fact that you took time out of your day to help them. And I think that's really what gravitates me towards them. They're just really down to earth, well-rooted people that just appreciate others going out of their way to give them some time and effort and just give them attention, right? Like, hey, I just have this question. Thank you for just giving me 15 minutes of your time even, right? So that part I think goes a long way for me too.
I would agree with that. There's definitely it makes the headaches of doing what we do a little bit easier when people are extra grateful,
Yep.
So it impacts business, obviously, and cash flow because you're able to afford things, hopefully with better interest rates if you have business credit built up on that side. But it also impacts the personal finances too, because you're able to continue living your life personally without having business impacting it, right? So we understand that as a basis, but I know you and I have talked a lot about common misconceptions regarding business credit. So what are some of your favorite or not so favorite misconceptions?
Yeah, it's always a pet peeve of mine when you see people advertising, and I just had this instance again too, where a client had posted they started working with me, and everybody's like, "Oh yeah, go! I got this guy that does these awesome like business credit building," and it was like credit card stacking. I'm like, that's not 60% of those credit cards don't even report to the bureaus. So awesome, cool. Now you've got a bunch of credit card debt that you probably don't know how to manage, but that's a whole nother conversation. You just get all these little like people that advertise stuff. It's like, go start up an LLC, and then if you start up an LLC, you can go to like Navy Federal Credit Union, and they'll give you $50,000 just because you started an LLC. Navy Federal Credit Union started getting out of commercial and business lending like 3 years ago. Like, it's not even in their interest anymore to do business anything. They're trying to just go straight consumer, right?
Yeah.
It's like, why are we sending people this terrible information? Well, it's because they funnel them into something else, right? There are a lot of net accounts that you need to use, and if you use them, you can use them, and they can be very beneficial. But people need to understand, and this is where I think a lot of like the people that preach this business credit side of things, I think go a little bit overboard. But Like net 30s should be used in step with other loans that you're using for your business to build good comparable debt and to get you through tier one and tier two to get you to the better credit cards and the better loans. So you do have to have some in order to get there. But
Yeah.
let's at least make sure that the ones you're using are good and beneficial. The other one that's my favorite is like, business owner, you can get off of personal guarantees on everything. I hear that as well. Like, you're never going to get off of personal guarantees until you're a fairly large company. You can get off of personal guarantees on vehicles and equipment, your suppliers. Like, businesses, if you're doing over 1.5 mil, you should be sending an email out and calling your suppliers and asking to be removed as a personal guarantor on your supplier accounts. Right? Because you don't need to be. They don't need to collateralize any of your personal assets at that point in time. That's not necessary for them, right? So, but it's little things like that, right? Like, just understand, if you ever use an SBA, you're going to be a personal guarantor on the SBA.
Yep.
If you ever use a big line of credit, until you're large enough to have enough assets that you can pay or want to pay $25,000 to $75,000 for a full financial audit, then you can get to an asset-based line, which doesn't have personal information on there. But again, you've got to have the assets to be able to do it and want to pay the type of money to get your finances audited. So it's just all those little pieces. Start up a business, and if you get your LLC set up and get your DUNS number set up, you can have $250,000 in business credit. Well, then you go down that rabbit hole, and it's actually just, again, somebody else doing credit card stacking.
Yeah.
Right. Which has its place, has its time, but I tell everybody, like, credit cards, if you don't manage them well, are going to be one of your worst enemies. And in a lot of cases, people don't even understand what the difference between a revolving card and a charge card is, and then they get into issues with Amex.
Yeah.
There's a heavy charge card. They're like, oh, Amex keeps calling me and they keep wanting me to pay this month. I'm like, yeah, because you rolled money over month to month, and it's a charge card.
Yeah.
So just so much misinformation around there. It's a great tool. It has its limits and abilities, and really until you're over 10 mil or doing 150K to 250K in monthly spend, almost every credit card is going to be guaranteed. There are cards out there that aren't, but like, people need to know that stuff.
Yeah. So tell us a little bit more about how you help businesses then.
Yeah. So, when I got into this, like I said, I was with Jay Galt. They're pushing corporate credit, which exists, but it's just a fancier term for business credit, right? You just have the 4 tiers, and you stair-step it in. Well, then I got into the direct lending space, and I learned some stuff through that as well that I kind of already knew, and some of it was finding out that brokers, especially brokers that offer leases or vehicle loans and stuff, we're also telling businesses that, hey, you can't actually go qualify for a commercial line with Ford or GM or Ally until you're, probably 7 million and have, up to 15 employees. Now, that's absolutely not true, right? But you understand why they do that, because they want to keep people in their wheelhouse, right? And I don't necessarily blame anybody for wanting to keep people in your business. I'm a believer of just tell people the truth and let them decide how they want to go do things themselves.
Yeah.
So as we were going through these experiences, there's just always something in my gut that was like, you can't help people if subtly you're getting paid out by sending them through one form of loan process or another, right? Because then you're no longer an unbiased resource to these people, and they need it. So 8 months ago, we changed that model, and we became almost as unbiased as you can. Yes, do I still have lending partners and stuff that I refer to that I've trust and vetted? Absolutely, because you need to. Do I have any direct means of getting paid out by all of them? No, not necessarily, but at the same time, full transparency, some of them do pay me out, right? But what that's done for us is it's allowed to shift our model for revenue so that we're able to better support the clients by being a lot more hands-on. So we've positioned ourselves more as, like I said before, kind of like a money manager and like a loan concierge service, as well as a credit repair for business credit. I will never go into the consumer credit world because that's an absolute disaster.
Business only.
Yeah, personal credit is not even remotely interested in that. So, but what we found is that just by giving people this information, arming them with education, knowledge, helping them go and be able to ask the right questions to a lender when something's happening. Like I have a client right now that his bank that he's been with for a while just got bought out by another bank. The new bank didn't like the way they had his line of credit set up, so they just cut his line of credit by $150,000 and they're terming it out. Well, what he found out through this process was that that bank was trying to collateralize his personal home and his wife's car. And I was like, no. I'm like, you need to push back on this because you have enough in just the equipment that you had under that line of credit for them to collateralize just your equipment. So if they want to do your wife's car, I was like, you can give a little there, but I'm like, you are not giving it all on the house because they don't need it. And so he pushed back and got it just to do his wife's car, and he got good terms, but I also sent him somewhere else so he could get some other quotes and stuff to do some shopping. But, he appreciated the fact that there was just somebody there that was watching out for him.
Yeah.
And hey, you need to push back on this. Hey, you need to ask questions about this. The amount of people I have me send Stripe loans and say, hey, this looks like a really good loan. And I'm like, I have ChatGPT set up now where it's like my super friendly little assistant. And I'm like, because when you actually compartmentalize those loans, and the problem is people see the first number they want to see, and they, like, one of them was like, hey, this is only a 9% loan. I'm like, no, that's a 9% service fee. I'm like, I bet if we throw this in the ChatGPT and my little like algorithm and questions thing that I got it set up with, I said I bet it will come out between 28 and 45% interest. And sure enough, it came back at 39% interest for the total loan. He's like, what? He's like, nowhere in here does it say that's what it's going to be. I'm like, that's the problem with Stripe. That's the problem with QuickBooks. That's the problem with almost all of these is they word them and structure them in a way that it sounds and looks good. Oh, I can afford $232 a day. That's not too much, right? Well, when that clock keeps ticking over and over and over again, it's a lot. And all of a sudden you're like, oh, I'm paying like $8,000 a month. What?
Yeah.
Right? So it's just educating, information, really truly trying to be in the best interest of that business owner so that they can take a loan out with confidence. And why do I like working with ones that have financials in place? Because now we can actually articulate what we're actually getting with that loan, and we can put the math to it. And when you can put math to something, you can put data to something, you can make a good decision. And when you can make a good decision because you have the facts and the numbers right, you feel a lot better going into loan than like, I think I need a loan, or I feel like I need to take this loan out, or I don't really know what my numbers say, but I need to hire somebody, right? Yeah. And then they hire that person, and 6 months later, they're like, I don't understand why I'm losing so much money. So it's just, that's our stance on it, is just let's bring a little bit of common sense back to this. And let's put the control back into the business owner's hands of the whole lending process so that you're not crawling into a broker, a lender, QuickBooks, Stripe, begging for money. You're walking in confident, you're walking in armed with knowledge and data and information, and you're dictating the terms that you're going to take a loan out on or you're going to walk. Right? That's true power. When you can turn around and walk away from something because it doesn't fit the way you want it to be, now you're in control of it. Until you can do that, you're not in control of it.
Yeah. That's true. Do you have any, as we're getting closer to our time here, so do you have any fun success stories that you want to share before we start wrapping up?
Yeah, I've shared a few, but a lot of them are just, probably one of my favorite ones right now is I had a pool, and he still hasn't gotten to the point where he wants me to share his name, so
that's
respectful of that. But I got a pool business that came to me about 4 months ago. And they were in a 68% interest Headway Capital loan, and they had some other credit cards maxed out. They had a Capital One Sparks card that was maxed out. Which, with credit cards, I'm going to say this too, so this is really important. You need to read very carefully how credit cards are going to do your thing, how they're going to report. Capital One is notorious for saying it's a business card. But if you don't read it close enough, it actually reports to your personal. So if you miss a statement date on that one, not even the due date, the actual statement date, your utilization and your credit score is going to drop a lot, right? So be mindful of that as well. And this kind of reminded me of that. So he was maxed out there. He had that Headway Capital loan. They had been going backwards in revenue because they didn't plan for the COVID drop off on money in the business that they were, and they didn't get their maintenance department and stuff up and running fast enough. So just kind of worked alongside of his fractional CFO that he had just hired and started unwinding stuff. Just recently, we were able to save him 30% a month on his payments out of those. So he was paying about $22,000 a month, and we were able to reduce that by 30%. we're close now to being able to roll the rest of it into an SBA. I also helped him go and get and apply for one of the SBA disaster loans because they were in where Hurricane, I think it was Helene, went through, I think. So they're close to getting that money all wrapped up. That's also a disaster of a process, apparently, going through that whole thing. So, so that one's been really successful in just the fact of like, he is finally starting to feel like they're going to actually be able to keep the doors open and save it. Because when he reached out to me, he was up against the wall with, I think, a bookcase had fallen against him, basically. So that's fun. You know, one of my other favorite ones is I had a roofer reach out to me. He had 12 vehicles that he had financed under his personal name, was getting denied for loans on his him and his wife were trying to buy a new house. And they kept denying him. And the funny part was, the same bank that he was applying through a mortgage for, he also had all his vehicle loans on. And they're like, well, we can't do this because your utilization and stuff is too high. And he's like, well, why? And they're like, because your vehicles are all financed on you. And he's like, you guys did these in my business name. Why is this coming up this way? And so he had seen a post on Facebook of this and reached out to me. And over 6 months, we were able to help him put a plan in place. He paid off 4 of them, and then we were able to refinance the rest of them out of his personal into his business.
Nice.
So I had a personal guarantee on it right away, but we also got him set up with Ford Commercial. So we helped him go get an approval with Ford Commercial. So he got an approval with them for $250K. His first approval was 13.25%. He's down to 9.75% with them now.
That's good.
And his line is up from that $250K up to $400K. So he's been able to just kind of cycle through. Now he doesn't have a single vehicle in his fleet now that is personally guaranteed. It's all under his EIN. But within 6 months, we were able to do something for him that his lender had continually just told him this is impossible. Your debt to income is too high, blah, 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 blah. And they wouldn't offer solutions, right? So it's little things like that, right?
Yeah.
Even to the little ones of just getting somebody onto the right credit card, where I get a message like, hey, ever since you helped me move credit cards, my score has been consistently over 800 now for like 3 months, and I don't remember the last time that's ever happened.
That's awesome.
So sometimes it's the little ones that matter more than some of the other stuff, but
it sounds like a lot of good big ones too. A lot of good big ones that are happening.
I could go on a lot longer on just that subject too, but so.
Well, as we wrap up this first episode, how can somebody reach out to you if they are interested in learning more about how you can help them?
Yep. So we do have a website, BlueSkyBizSolutions.com. Honestly, though, the easiest way is probably on social media. Just Facebook, Paul Childers, LinkedIn, Paul Childers, Instagram, PA Childers. I'm super original, I know. But I'm really easy to find on those places. Shoot me a DM. That's probably the best way to get a hold of me. Otherwise, we have a contact us link on our website that you can reach out for more information as well.
Perfect. Thank you so much for taking the time, and thank you for listening to this episode. I hope that you walked away with some knowledge. If you have any questions about how to build your business credit, or maybe just inquire about why you can't get approved for that personal loan, reach out to Paul on any of his social media platforms or his website. You can go ahead and schedule a consultation with him and get your business and personal finances back on track. Hope you have a great day, everybody.